I've been asked to review briefly the differences between a C corporation and an S corporation for purposes of the final exam. And so I have a short presentation to accompany this PowerPoint slide. C corporation and an S corporation are both corporations. Neither one of them is inferior or superior to the other one as far as the common elements of a corporation are concerned. They both enjoy limited liability protection as a full-fledged corporate entity. They both are owned by their shareholders. They both are governed by their board of directors, and they both are run, their day-to-day operations are run by their officers. The term of a corporation is generally perpetual. In other words, it does not cease to exist when an owner or owners die. It continues. The differences between the corporations are typically where you'll have questions, and so I want to spend a few minutes talking about these differences. The principal difference is that a C corporation makes no special election. As such, it is a regular corporation, it is a tax-paying entity, and it is taxed on its income. The S corporation, on the other hand, has made a special election under Subchapter S of the Internal Revenue Code to be treated like a flow-through entity such as a partnership or limited liability company. What this does is makes an S corporation a non-tax-paying entity. The C corporation has the possibility of double taxation, whereas the S corporation does not. C corporation would have to suffer double taxation in the event that the corporation earns income, where the corporation is taxed on that income, and then distributes some or all of the remainder out as a dividend. When the shareholders receive a dividend, then the shareholders will be taxed on that dividend income at their individual tax rate. On the other hand, an S corporation, since it has made a special election to be treated as a pass-through or flow-through tax entity, will have only one level of taxation at any given time. The corporations who can choose to make the S election are not every corporation. For example, Walmart Corporation could not be an S corporation. There are limits as they relate to things such as the number of shareholders that an S corporation can have. There are limits to the classification of stock that an S corporation can have. There are limits as to the size of a corporation. There are also limits such as non-foreign shareholders for S corporations, etc., etc. Now, I won't test you on the specifics of it, but in the event that you have an issue in the business world, you will need to make sure that you review to make sure you comply with the Subchapter S election requirements. Well, let's finish this up with going through an example, a brief example that I hope highlights and illustrates any other differences between a C corporation and an S corporation. Let's assume that the same corporation earns $100,000 of income and distributes $50,000 to its shareholders as dividends. First, let's take the C corporation. The C corporation would pay tax on the full $100,000 of income. If you assumed a 20% tax rate, and I'm just making a wild assumption there, it'll depend on a number of different factors, the corporate tax, income tax, would be $20,000, and the corporation would have to pay that tax. In addition to that tax, that's one level of tax, there is a double tax that occurs, and this is the example of double taxation, when $50,000 is distributed to the shareholders. When that occurs, the shareholders must pay tax on that $50,000 as dividend income at whatever their individual income tax rate may be. Now let's go through the S corporation. Same example, $100,000 of income. This corporation would pay 0 in income tax because it is a flow-through entity. It has made a special election to be taxed just like a partnership or limited liability company, neither of which pay taxes either. And as a result, there is only one level of tax. But here's something that trips up a lot of students, and that is that here's the downside. Even though, in this example, $50,000 and only $50,000 was distributed to the shareholders as a dividend, the shareholders of an S corporation pay tax on the entire $100,000 of income, even if the corporation held on to some of it, and they pay that proportionally at their individual tax rate. For example, if there are 3 shareholders, then each one would pay tax on $33,333.33 of income at whatever their individual tax rate may be, and that can vary from individual to individual. So that's the downside. Even though there's only one level of tax, you may end up having to report income on your personal individual income tax return on income you never received. In the example that I just gave, each of the 3 shareholders would have received approximately $16,667, but they were taxed on $33,333, and that doesn't hardly seem fair, does it? But that is that's the downside to the S corporation election. Hopefully this has been of some help. I wouldn't spend a lot of time on this, but I would hope that you would know at least this. Thank you so much. Good luck on the exam.